All right. So let's get on to the show. I got to say, I think it's going to be great. I'm really looking forward to this. I went through this because I found it necessary to understand what the IRS was talking about when they're talking about trust. So not only did I get on the IRS website and I was doing a search for different types of business entities, because I want to see what they're talking about. And they're pushing people towards, obviously, LLCs, sole proprietorships, and the like. And I guess, I shouldn't have found it interesting that they didn't mention, business trusts. But I did find where they mentioned business trusts because I was specifically looking for that. And then I came across, this interesting information regarding the abusive trusts that the Internal Revenue Service discusses. So I'm sure a lot of people have come across this information, and I have to say it is worded in such a manner to induce fear. I'm going to say that off the top because I looked at it. There's points where I was reading this and I was laughing. Some points where I was laughing at how hard they were so, I'm going to quote, hating, just, for real. And then there was other parts where I was laughing at how much they were teaching and how much I agreed with what they were saying. So I know people are like, so how are you agreeing with what the IRS is saying on abusive trust? I know you do trustee training, you teach trust administration. This is something that you offer in the private. So wouldn't this bother you that the IRS is talking about abusive trust? Actually, no. No, it doesn't. Two reasons why this episode right here, in my opinion, is significant and will be significant. Number one is the IRS honestly there's some good information in what they're saying about, abusive trust. But here's the thing. This is their information. If we want to know how to play the game, we got to know what the rules are. Who makes the rules with regards to taxes and so on and so forth? The IRS, the Internal Revenue Code, so on and so forth. All right? It's logical to me. So these are their rules. So I don't really need to understand, in my opinion, as an administrator and an executive trustee, an administrator of trust, and an executive trustee, I don't need to understand what can be done with regards to what the IRS talks about. What I need to understand is what they say cannot be done and understand why they're saying that and understand the implications of that or, potentially negative implications of ignoring it. So with that in mind and with such the way that the IRS discusses trust and the way they talk about, maybe individuals such as myself, maybe I did take it a little personal, you know what I mean? Because, it is meant to discredit, ultimately, people such as Host Sot, High Frequency Radio Network, those who are trying to free our family, our brothers, our sisters, our people, our peers, our neighbors, whatever. It is intended to throw shade, to seriously throw shade. Now, there are definitely people who need shade thrown. Let's just be honest. Definitely. So, with that being said, I'm going to get to the second reason why I think, this episode is going to be significant. It's important to be informed. It's important to be abreast of particular knowledge that can generally have the ability to affect one's life, liberty, and pursuit of happiness. I mean, not to sound corny or anything. Why not be informed? So hopefully this is an informative episode. As we proceed, I must state that I am not an attorney. I'm not a lawyer. I do not give legal advice. I'm not a CPA, an enrolled agent, an MB. I'm not any of that stuff. I'm not giving legal advice. This is me reading documents and talking about what I'm reading, the way I understand it, from my research and my personal, private education. All right? So for those who want to follow along, once again, IRS.gov, go to the search window, type in abusive trusts. Now, there was multiple links to the sections of this, of what I'm going through. So, you click on a link, there's some words, maybe a paragraph. You go back, click on another link, there's more stuff. And then there was a lot of links that were broken. You know what I mean? And I checked on multiple computers because I wanted to be diligent. But there's links in there that's broken when you go there where it talks about abusive trust. You click on the link after you do the search. You see what I'm talking about. So what I did is I went to every link that was available in succession, in order, and I copied it and pasted it into a Word document, and I printed it out. And I printed out 17 pages. I'm not going to read the whole 17 pages. Don't worry about it. But I'm just going to go over things that I'm going to go over most of it, obviously. I'm taking notes. This is going to be great, in my opinion. But, I'm a nerd as well. You know what I mean? So I have no misgivings with regards to that. And there's no shame in my game. So, abusive trust arrangements. Okay? These arrangements frequently involve more than one trust, each holding different assets of the taxpayer. Hold up. Let me be specific real quick before we start. We understand the distinction between public and private. We understand that with regards to an entity doing business, whether foreign or not, whether you want to consider it foreign or not, if it owes its existence to legislation, it is governed by the state legislation from where or from whence it came. But there is a distinction when an entity does not owe its existence from legislation. So I want to be specific. There are 3 different types of trusts with regards to the Internal Revenue Service. And they say it in here, but I'm just going to say it real quick. It's grantor, simple, and complex. That's all the Internal Revenue Service sees. Simple, grantor, or complex. What they want to do is attach the income of the trust to a grantor, a beneficiary, or a trustee due to, improper administration or however it's set up. But let's be honest and let's be clear. The administration of the trust, if it's a legislative trust or a so-called public trust, is governed by legislation. The administration of the trust is governed by legislation. Now, a contract trust is governed by the indenture itself. Now, more often than not, the public does not refer or govern these types of entities, a contract entity. So when they speak of a public legislative entity, and when they're not speaking of public legislative entity, they are vague in reference the trust instrument. Okay? Now, specifically, we're dealing with trust. A trust agreement is public. More often than not, a trust contract is private. Okay? I just want to go do that. I know we high frequency. I know we family. I'm sorry. Abusive trust arrangements. These arrangements frequently involve more than one trust, each holding different assets of the taxpayer. Okay? the taxpayer's business, equipment, home, automobile, as well as interests in other trusts. The trusts are vertically layered, with each trust distributing income to the next layer. Funds may flow from one trust to another by way of rental agreements, fees for services, purchase and sale agreements, and distributions. The goal is to use inflated or non-existent deductions to reduce taxable income to nominal amounts. Okay, so I'm sure you are going to be very, very specific of the words that are used in this document, in this, this publication from the Internal Revenue Service. So I notated inflated and I notated non-existent. Non-existent, okay? The goal is to use inflated or non-existent deductions to reduce taxable income to nominal amounts. Look, anybody's coming at you saying that they can get you to, pay taxes by using inflated or non-existent deductions to reduce taxable income, that is an abusive trust. That's fraudulent. Run away. Not even playing with you. And I'm telling you, there was times when I laughed because I agreed with this. There was also times where I laughed and it was just blatantly obvious they're attempting to throw shade. Moving forward, although the individual abusive promotions vary, two basic schemes have been identified. Okay, the domestic package, right? The foreign package. These schemes are often promoted by a network of promoters and sub-promoters who have charged $5,000 to $70,000 for their package. $70,000? Woo! This fee enables taxpayers, okay, to have trust documents prepared to utilize foreign and domestic trustees as offered by promoters. Okay, so check this out. They're charging you a fee so you can utilize, so you can have trust documents prepared, and you can utilize foreign and domestic trustees. So you're utilizing foreign. What? My family state set up. No, there are no foreign or domestic trustees besides me and the fam. Ain't nobody foreign. You know what I mean? So maybe foreign to the Internal Revenue Service. Okay? So you're utilizing foreign and domestic trustees. So you're paying a fee to have trust documents prepared to utilize foreign and domestic trustees as offered by promoters and to use foreign bank accounts in corporations. In some instances, tax return preparer services are also made available. Straight up, I wouldn't do that either. You're doing anything, you need to find your own tax preparer who understands what you're doing and is willing to contract with you on behalf of whatever entity you're administering. All right. Okay. Moving forward. Taxpayers should be aware that abusive trust arrangements will not produce the tax benefits advertised by their promoters and that the IRS is actively examining these types of trust arrangements. The IRS is actively examining. Okay? They're actively examining these types of trust arrangements. Furthermore, in appropriate circumstances, taxpayers and or promoters of these trust arrangements may be subject to civil and or criminal penalties. So basic taxation rules. To understand fully the trust schemes offered today, it is important to focus on some basic trust taxation rules. All right? This is where they start teaching. Y'all want to learn about trust? Y'all can read some of this. A valid trust. The IRS is going to tell you what a valid trust is. Gorgeous. A valid trust is a legal arrangement creating a separate legal entity. Very well said. I like that. It's a separate legal entity. Correct. The duties, powers, and responsibilities of the parties to this arrangement, the trustees, are determined by state statute and the trust agreement. Hold on. You lost me. Remember I said state statute is legislation. So this right here lets you know, obviously, that they're talking about a public trust, a legislative trust. And not all trusts are legislative trusts. There's over 80 different types of trusts. Anyone tells you they know them all, they're lying to you. Walk away. Walk away. All right, so the duties, powers, and responsibilities of the parties to this arrangement are determined by state statute and the trust agreement. So we know they're talking about statutory trust. If we're private, we're talking about a contract. We ain't talking about an arrangement. We're talking about a contract. And it's not governed by state statute. It's governed by the contract. So watch it. The first sentence they said, I loved it. A valid trust is a legal agreement or arrangement creating a separate legal entity. A legal arrangement. I don't like arrangement. That's public. I would take that out and put contract. A legal contract creating a separate legal entity. So y'all know, these are the distinctions between the type of trust I administer and the type of trust that the IRS is speaking about in their own words and terminology. To create a trust, legal title to property is conveyed to a trustee, who is then charged with the responsibility of using that property for the benefit of another person, called the beneficiary, who really has all the benefits of ownership except for bare legal title. I agree with that sentence. So the first sentence was good, except for, arrangement. I like, it's a contract, not an arrangement when you're dealing privately. And, the third sentence, I like that one too. Second sentence, it's obvious that they're talking about a public trust. Comes under legislative control. The IRS recognizes numerous types of legal trust arrangements, and they are commonly used for estate planning, charitable purposes, and holding of assets for beneficiaries. The trustee manages the trust, holds legal title to trust assets, and exercises independent control. Okay? All income a trust receives, whether from foreign or domestic sources, is taxable to the trust, to the beneficiary, or to the grantor of the trust, unless specifically exempted by the Internal Revenue Code. So let's say unless it's tax exempt. It's going to be taxed to the trust. It's going to be taxed to the grantor, the beneficiary, unless it's tax exempt. Unless, foreign trust to which the U.S. taxpayer has transferred property or treated as a grantor trust, as long as the trust has at least one U.S. beneficiary. The income the trust earns is taxable to the grantor under the Grantor Trust rules. Grantor trusts are not recognized as separate taxable entities because under the terms of the trust, the grantor retains one or more powers. Y'all hear this? Under the terms of the trust. They're talking about a grantor trust. Grantor trusts are not recognized as separate taxable entities. Okay, remember I told you grantor, complex and simple? Grantor trusts are not recognized as separate taxable entities because under the terms of the trust, the grantor retains one or more powers and remains the owner of the trust income. All right. Excuse me, all right. In such a case, the trust income is taxed to the grantor whether or not the income is distributed to another party. They got some background. It is estimated that $4.8 trillion in wealth will be inherited or transferred from one generation to the next by the year 2015. This must be old. This is what's on the site, though. In the last few years, the Internal Revenue Service has detected a proliferation of the abusive trust tax evasion schemes. Abusive trusts, not trust, and tax evasion, not avoidance. You got me? Pay particular attention to what these, These promotions are targeted towards wealthy individuals, small business owners, and professionals such as doctors and lawyers. Abusive trust arrangements typically are promoted by the promise of such benefits. Y'all got to understand. We're talking about trust tax evasion. Tax evasion is illegal. 100%. Abusive trust arrangements often use trusts to hide true ownership of assets and income or to disguise the substance of a transaction. Although these schemes give the appearance of separating responsibility and control from the benefits of ownership, we know that there are no benefits of ownership. The benefit is in control. From the benefits of ownership, as would be the case with legitimate trusts, the taxpayer, in fact, controls them. All right, a legitimate trust is allowed to deduct distributions to beneficiaries from its taxable income. Yes, with a few modifications. Therefore, trust can eliminate income by making distributions to other trusts or other entities as long as they are named as beneficiaries. This distribution of income is key to understanding the nature of abusive schemes. In the abusive schemes, bogus expenses are charged against the trust income at each trust layer. Bogus expenses. Evasive, bogus, fake expenses. You're reporting fake expenses to the IRS. Why would you do that? I don't do that. After the deduction of these bogus expenses, the remaining income is distributed to another trust and the process is repeated, the bogus expenses process. The result of the distributions and deductions is to reduce the amount of income ultimately reported to the Internal Revenue Service. Filing requirements for legitimate trust are discussed below. A domestic trust must file a Form 1041 income tax return for estates and trusts for each taxable year. Very correct. Foreign trusts that generate income, this is me talking, so L, I'm not reading. Foreign trusts that generate income that is effectively connected with a trade or business within the United States. And the income and expense of Federal Reserve notes. So if you say I got my foreign trust, if you got a bank account and you're putting Federal Reserve notes in there, you got to file 1041. Otherwise, you're dealing with some abusive trust stuff. Cool. If the trust is classified as a domestic grantor trust, we do not deal in grantor trusts. It is not generally required to file a Form 1041, provided that the individual taxpayer reports all items of income on his own 1040. Then we understand going private is not using the social. So if there's no income to the social, then there's no requirement to file a 1040. Thus, the individual pays the total tax liability upon the filing of his return for that taxable year. All income received by a trust, whether from a foreign or domestic source, is taxable to the trust, to the beneficiary, or to the grantor unless specifically exempted by Internal Revenue Code. I said that earlier. Foreign trusts are subject to special filing requirements. If a trust has income that is effectively connected with the U.S. trade or business, it must file a Form 1040-NR, U.S. non-resident alien income tax return, a Form 3520, annual term to report transactions with foreign trusts, and receipt of foreign gifts must be filed on the creation of or transfer of property to certain foreign trusts. Form 3520A, annual information return of foreign trusts with U.S. owner, must also be filed annually as well. Foreign trusts may be required to file other forms as well. In addition to filing trust returns, as described, the taxpayer may be required to file U.S. Treasury Form TD-F90 227 Foreign Bank, blah, 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 blah. That's it. You got accounts in the foreign bank. I'm going to skip that because we're getting low to the wire, and I want to get through all this. Abusive domestic trust. All right, this is where my highlighter started going crazy. All right, y'all. So let me get through this. Abusive domestic trust schemes. Domestic trusts are trusts created in the U.S. Here are some common abusive trust schemes. Abusive domestic trust schemes. Excuse me. Domestic trusts are trusts created in the U.S. So if you're dealing with a contract, you're not talking about a domestic trust unless it states specifically in the contract that it falls under the laws of that particular state. And if you're private, I don't know why you do that. Business trust. I love this. Check this out. This involves the transfer, transfer of an ongoing business to a trust. So it's an ongoing business. It's like an LLC that's operating and is still ongoing and not operating, transferring it to a trust. Not saying doing business from a trust or through trust or with a trust. The domestic trusts are trusts created in the U.S. Here are some common abusive domestic trust schemes. Okay, this is under abusive domestic trust schemes. Find it on the IRS website. This involves the transfer of an ongoing business to a trust, also called an unincorporated business organization. Transfer of an ongoing business to a trust. Just want to be specific. A pure trust or a constitutional trust. Now, through here, this is where I saw them start throwing shade. So all of the associated names that some people have become familiar with as referencing, a private contract trust. They're going to throw them in here. They're going to throw all these different reference names in here. Watch this. And not just in this one. It's going to be kind of throughout this. Also called an unincorporated business organization, a pure trust, or a constitutional trust. All right? It gives the appearance that the taxpayer has given up control of his or her business. It gives the appearance. In reality, through trustees or other entities controlled by the taxpayer, he or she still runs the day-to-day activities and controls the business's income stream. So I'm gonna read that again because this is dope how they wrote this. I'm just gonna say I gotta give it up to them. In reality, through trustees or other entities controlled by the taxpayer. Okay? He or she still runs the day-to-day activities and controls the day-to-day business income stream. Such arrangements provide no tax relief. I would agree with that. The courts have held that business income is taxable to the taxpayer under a variety of legal concepts, including lack of economic substance, which is sham theory, assignment of income, you can't assign your income, or that the arrangement is a grantor trust. In some circumstances, the trust could be taxed as a corporation. So, lack of economic substance. They're teaching. This is teaching. I'm going to get to that in a second, economic substance. Assignment of income, I can't generate income as a taxpayer and, sign up, get a job, give them my social, and then get a check written in my name, my taxpayer name, and then assign it to a trust to avoid taxes, individual taxes that I generated with that individual income tax number, that Social Security number. You understand what I'm saying? I agree. That's true. or that the arrangement is a grantor trust. In some circumstances, the trust could be taxed as a corporation. They go over equipment and service trust. This trust is formed to hold equipment that is rented or leased to the business, often at inflated rates. The business trust reduces its income by claiming deductions for payments to the equipment trust. This type of arrangement has the same pitfalls as the business trust, and it will result in no tax deduction or reduction. Please understand, remember the first thing they said. Okay, page 2, this is page 3, page 4. Domestic trusts are trusts created in the U.S. Here are some common abusive domestic trusts. So we're talking about domestic abusive trusts. So you can't do equipment service trusts domestically under legislation, in state legislation. IRS doesn't recognize that. I see that. I've read that Internal Revenue Service documents with regards to trust. It makes sense. Family residence trust. You can't do a domestic family residence trust. Taxpayers transfer family residences and furnishings to a trust, which sometimes rents the residence back to the taxpayer. The trust deducts depreciation and expenses in maintaining, operating the residence, including gardening, pool service, and utilities. The courts have consistently collapsed these types of trusts, taxing income to the taxpayer and disallowing personal expenses. Excuse me. They're always looking to collapse that trust. Or we look at it as a grantor trust, and it's really easy when the trust is a public, a legislative trust, a domestic trust, and it falls and is governed by state legislation. A domestic family residence trust, nope. An equipment or service trust, nope. A domestic business trust, nope. Remember, these domestic trusts are trusts that come into existence under state legislation, and they're formed by agreements, not contracts. There is no such thing as a what is it? What do they say? A constitutional trust. What is that? There is no such thing as a common law trust, and I'll get to that in a second. Charitable trust. Taxpayers often transfer assets or income to a trust. Transferring their income, how are you going to transfer your income? It's illegitimate. Claiming it to be a charitable organization. Trust or organization pays for personal, education, or recreation expenses on behalf of the taxpayer or family members. The trust then claims the payments of charitable deduction on its tax returns. These alleged charitable organizations often, not always, are not qualified and have no IRS exemption letter. So I administer a private family foundation. Definitely has a determination letter from the Internal Revenue Service. So I understand what they're saying. How can you claim that this is charitable when it doesn't qualify as tax exempt? Charitable organization according to Internal Revenue Code. Asset Protection Trust. Trusts are promoted as a means. These trusts are promoted as a means of avoiding liability for judgments against an individual or business. However, beware of any asset protection trust marketed as part of a package to reduce federal income or employment taxes. The courts can ignore such trusts and order the taxpayer's property sold to satisfy the outstanding liabilities. Abusive foreign trust schemes. Abusive foreign trusts are often formed in foreign countries. They're formed in foreign countries that impose little or no tax on trust. I paused for a reason right there. And also provide financial secrecy. These are usually tax haven countries, supposedly outside the jurisdiction of the United States. Typically, abusive foreign trust arrangements enable taxable funds to flow through several trusts or entities until the funds ultimately are distributed or made available to the original owner, i.e., they just described a grantor trust. Purportedly tax-free, in actuality, the income from these arrangements is fully taxable. Yeah, man, it's a grantor trust. Sounds like it. Foreign packages often begin with an asset management company, a business trust, and then distribution of income to several trust layers. These schemes also involve offshore bank accounts and international business corporations. I administer private trusts for my private estate. I'm contractually bound to non-disclosure, but I can disclose that the bank accounts are at domestic banks, man. Chase and U.S. Bank and Wells Fargo's and such. So this, what they're describing, sounds even weird to me. These schemes also involve offshore bank accounts and international business corporations. A typical abusive foreign trust scheme has the following steps. In many promotions, taxpayers are advised to create asset management companies. The AMC, asset management company, which lists the taxpayer as the director, is formed as a domestic trust. Y'all hear that? It's formed as a domestic trust. An individual on the promoter staff is usually the trustee of the AMC, but the taxpayer quickly replaces this individual. So the taxpayer replaces this individual with the taxpayer himself or herself. The purpose of the AMC is to give the appearance that the taxpayer is not managing his or her business and to start the layering process. Okay? Business trust. The next step is to form a business trust, again, very similar to the domestic scheme. Foreign trust 1. Next, a foreign trust is formed in a tax haven country. Income from the business trust is distributed to this trust. We will refer to this trust as Foreign Trust 1. In many cases, AMC will be the trustee of Foreign Trust 1 because the source of the income is U.S. based and there is U.S. trustee. The foreign trust has filing requirements as discussed earlier in this section. Foreign Trust 2. The next step is to form a second foreign trust. Once again, in a tax haven country. Foreign Trust 2. All income of the Foreign Trust 1 is distributed to Foreign Trust 2. Either Foreign Trust 1 or Foreign Trust member of promoter staff becomes the trustee of the Foreign Trust 2. If the trustee is Foreign Trust 1, the taxpayer still controls Foreign Trust 2 by the fact that he or she is in control of Foreign Trust 1, the trustee, by the dictatorship of the AMC. If a foreigner is the trustee of a Foreign Trust 2, the taxpayer is empowered by the promoter to overrule any decision by the trustee. In either case, the taxpayer is in control of the foreign trust. You see this? If you're empowered in any trust or arrangement to overpower the decision of the trustee, that's a grantor trust. They're describing grantor trust. I'm telling you, y'all can look this up yourself. Promoters who will claim that since the trustee and the sources of the income are now foreign, there are no U.S. filing requirements. Just because you supposedly or apparently have a foreign trust, if any portion of the income comes from the United States in the form of Federal Reserve notes or any type of credit or debits from any type of financial or national or state banking institution, there is a filing requirement, man. All trusts have to file, private or not. If they use Federal Reserve notes, bank accounts in the United States, private trust and public trust have to file the appropriate forms with the IRS. Anybody saying that you don't have to file is you need to run away from them. In actuality, the taxpayer has never relinquished control of their business, but has set up, with the assistance of a promoter, an elaborate scheme to subvert and evade taxes. Evasion, once again, is illegal. The United States Supreme Court has held many, many times that you cannot create a taxable event and then evade it by trying to create sham trusts and deductions and so on and so forth. Pay the tax. Avoidance is not illegal. All these, to me, like I said, are descriptions of grantor trusts. Asset Protection Trust. either as part of the second foreign trust or as a separate trust, an asset protection trust is formed. The taxpayer supposedly transfers all of his assets to it, including his home and other assets actually located in the United States. According to the promoter, this will make the taxpayer judgment-proof. In actuality, the courts look at the economic substance of the transaction. There goes that economic substance again. And if the taxpayer continues to reside in the home and controls his assets, those assets may be seized and sold in satisfaction of the liability. This definition of an asset protection trust is not meant to imply that all formed as part of an abusive tax scheme. So they're not saying all are formed. So not all asset protection trusts are abusive, is what the IRS is saying. However, beware of an asset protection trust marketed as part of a package to reduce federal income or employment taxes. The courts can ignore such trusts and order the taxpayer's property sold to satisfy outstanding liabilities that you already had. You can't just have some liabilities. You owe people, you owe stuff, and then just go and just transfer the stuff into a trust and think that the property that you owed at the time that those liabilities were owed isn't going to be subject to litigation and liabilities. It is. Straight up and down. If you owe money, you got to pay it. If you can't pay it, anything that you owned at the time that you owed that money is subject to any type of judgment or creditor. And, by the way, that's another description, once again, of the Grantor Trust Rules. When trusts are used for legitimate purposes, tax on the income generated by the trust property is paid by one of three entities depending on applicable tax laws. The type of trust, here we go, and the trust document. Read that again. When trusts are used for legitimate purposes, tax on the income generated by the trust property is paid by one of three entities depending on applicable tax laws. Depending on the type of trust and depending on the trust document. The three possible entities are the trust itself, the beneficiary, or the entity that transferred the property to the trust. Grantor Rules. Legitimate trusts do not transform a taxpayer's personal, living, or educational expenses into deductible items and do not seek to avoid tax liability by ignoring either the true ownership of income or assets or the true substance of transactions. 100% true. That's 100% factual. Contrary to promises made in promotional materials, several well-established tax principles control the proper tax treatment of these abusive trust arrangements. Now check this out. A trust, you can't have a trust pay for your personal living and educational expenses and then deduct them on your personal tax form. How stupid does that sound? That's an abusive trust arrangement. I mean, be for real. Contrary to promises made, I already read that. Substance, not form, controls taxation. The Supreme Court of the United States has consistently stated that the substance, rather than the form of a transaction, is controlling for tax purposes. Gregory versus Helvering, the court determined abusive trust arrangements may be viewed as sham transactions. So abusive trust arrangements may be viewed as sham transactions, and the IRS may ignore the trust and its transaction for federal tax purposes. Marcosian versus the commissioner held that the trust was a sham because the parties did not comply with the terms of the trust. So it sounds like you were commingling or self-dealing if you're not complying with the terms of the indenture or the agreement if it's public, and the supporting documents they're not complying with the terms of the trust and the supporting documents, and the relationship of the grantors to the property transfer did not defer any material aspect after the creation of the trust. In any material aspect, the relationship of the grantors to the property transfer did not differ in any material aspect. Material aspect. So title, the relationship between the property and the grantor, and the grantor didn't change materially. So the material title wasn't transferred. Sounds like a scam to me. I'm running away. The income and the assets of the business trust, the MUDA versus commissioner. The income and the assets of the business trust, the equipment trust, the residence and the family residence trust, and the assets in the foreign trust were all determined to belong directly to the owner. Sounds like it was a Grantor Trust, some sort of domestic public trust. Lucas versus Earl stated an assignment of income does not shift the incidence of taxation. The income remains taxable to who actually earned it. Okay, man, look, the IRS just stepped on some toes right there. You cannot assign income. I cannot, like I said, I cannot have a job. You know, give them my social. They write a check into the name on that social card and the name on the ID, the legal name, and then assign that check to a trust. I generated the income, or, I generated the income with the social. So whatever the income was generated, that's where the tax obligation is. Individuals cannot assign their income and reduce their taxable income or liability. So whatever entity generates the income, that's the one that is responsible for the taxation. Grantors may be treated as owners of the trust. Talking points: trust estate matters are third highest area of growth among CPA firms. Domestic trust filed 3.03 million Form 1041 forms last year, and 2.9 million 1041 returns for the year before. Third most frequently filed income tax return behind individual and corporate returns. That makes sense to me. Individuals, corporate returns, and what else? Trusts, nonprofits. Since the mid-1970s, the number of Form 1041 returns filed has doubled, and there has been a proliferation of abusive trust schemes marketed to avoid or evade income taxes. Facts about trust. A trust is a legal entity formed under state law to create a trust. Wait, I'm sorry. I ran over it. A trust is a legal entity formed under state law. It's a public trust. They're describing, the IRS is specifically talking about a public trust, a legislative trust. To create a trust, legal title to property is conveyed to a trustee, who is then charged with the responsibility of using that property for the benefit of another person. Another person, called the beneficiary, who really has the benefits of ownership except for bare legal title. That's true, whether it's a public trust or a private trust. That's absolutely true. But not all trusts are legal entities formed under state law. Let's make that clear. All right. Legal trusts are used in such matters as estate planning. Hold on, let me back up. Legal trusts are used in such matters as, and I want to point out that it doesn't say legal trusts are used in such matters limited to. So this isn't a limited list right here. Estate planning, to facilitate genuine charitable transfer of assets and to hold assets for minors and those unable to handle their financial affairs. A trustee is designated to hold legal title to trust property, to exercise independent control over it, and to be responsible for its management. Very, very true. All trusts must comply with tax laws set forth by Congress in the Internal Revenue Code, sections 641 through 683. Correct, with regard to the use of Federal Reserve notes or national or state debits and credits. Absolutely correct. Trust established to hide the true ownership of assets and income or to disguise the substance of financial transactions are considered fraudulent trusts. Cool. I'm down with that. I don't use trust to hide true ownership. I understand it's own nothing, control everything. Why would I try to hide on true ownership? I don't own anything. So I don't deal with fraudulent trust. Y'all see what I'm saying? IRS is schooling. This ain't even me. This is the IRS. Taxpayers are responsible for payments of their taxes as set forth by Congress, regardless of who prepares their return. Trusts are also being used to reduce income taxes through a variety of abusive techniques not allowed by the Internal Revenue Code, such as depreciate personal assets. I use a trust to depreciate my personal assets. I'm using a trust to depreciate my assets that I have in my name. Fraudulent. To deduct personal expenses. I'm using a trust to to deduct expenses, my personal expenses, off of income that I generated from a W-2 employment. Fraudulent. To split income over multiple entities, often filed in multiple locations. Sounds funny to me. To underreport income. Why would you underreport income? The 1041 system encourages honesty. It's ridiculous. I don't underreport anything. Why would I do that? I wouldn't advise anyone to do that. To avoid filing returns. File returns. I already discussed that. To wire income overseas and fail to report it. If you get income, you report the income. However you report it, if you deductible expense, a non-deductible expense to the trust, it doesn't matter. Report the income to attempt to protect transactions through bank secrecy laws in tax-haven countries. I'm good. We got some. Trusts continue to grow in number despite the following. Okay? But I found this very helpful. And y'all can find this helpful too. I'm just going to run through this. Professional and setup costs can be significant. That's very true. Increased complexity in filing and reporting trust and trust-related returns. And they go through all the forms. Check this out. 1041, U.S. Income Tax Return for Estates and Trust. 1041A, U.S. Information Return Trust Accumulation of Charitable Amounts. Form 3520, Annual Return to Report Transactions with Foreign Trusts. Form 3520A, Annual Information Return of Foreign Trust with U.S. Owner. Form 926, Return by U.S. Transfer to a Foreign Corporation. Form 114, FIN-CEN Report. Form 709, U.S. Gift Tax Return. Form 227, Split Interest Trust for Information Return. Form 56, Notice Concerning Fiduciary Relationship. Form 1040-NR, U.S. Non-Resident Alien Income Tax Return. Form 1042, Annual Withholding Tax Return for U.S. Source Income of Foreign Persons. These are all forms. Maybe you didn't know about these forms they may be associated with the 1041. Thanks, IRS. Failure to file penalty for the form 3520. Which one was that? 3520. 3520, Annual Return to Report Transaction with Foreign Trust and Annual Information Return of Foreign Trust with U.S. Owner. There's 35% of the property transferred to a foreign trust. Yada, yada, yada. Let me keep going. Woo! Man, time is flying. All right, look. The Internal Revenue Code generally does not allow trusts to operate a trade or a business. To operate. I would say a trust can definitely hold shares in an LLC or a business and receive, income dispersed to it as a shareholder or a managing member. But for the trust to actually operate the business, that doesn't seem correct to me. So I agree. A lot of things I agree with in this. The regulations require that trust operating a trade or business be treated either as a corporation or partnership if the grantor, beneficiary, or fiduciary materially participates in the operations or daily management of the business. If the grantor maintains control of the trust, then the Grantor Trust rules apply. You see, they talk about the Grantor Trust rules a lot. Grantor is treated as the owner and therefore taxable on income generated by a trust where the grantor is considered the substantial owner or enjoys the benefits of the corpus or income from the trust. That sounds like a revocable trust. A revocable trust is a grantor trust. I don't deal in revocable trusts. Tax courts, federal courts, and bankruptcy courts have been virtually unanimous in planning for the service, the Internal Revenue Service, where trusts are created to avoid income taxes. Currently, there are 2 abusive trust arrangements being promoted in the domestic package, foreign package. They said this. The domestic package involves series of trusts, blah, blah, blah. I think we went through this. If we didn't, for time's sake, I'm going to skip to the false claims used to promote false claims, I get excited, used to promote abusive trust arrangements, not contracts, public. False claim. Establishing a trust will reduce or eliminate income taxes or self-employment taxes. The truth is, the transfer of assets to a trust will give the donor no additional tax benefit. So if you are, like I said, if I have a job, W-2 or 1099, and I gave them my social for 1099, they write me a check or direct deposit my check. If I transfer that money to a trust, I don't receive a tax benefit. Period. Now, if the trust generates income, that's a whole nother story. Taxes must be paid on the income or assets held in the trust, including income generated by the property held in the trust. Held in the trust. Check it out. Not dispersed or expensed. That's held in the trust. Man, this is the words they use. False claim. You can transfer your income into a trust, thus limiting income tax. Taxation on income. False. That's false. We already know that's false. Income remains taxable to the individual who earns it. That's Supreme Court. Lucas versus Earl. 281 U.S. 111. That's in 1930. Income remains taxable to the individual who earns it. If an individual earns the income, you cannot transfer it to a trust and evade taxation. That's evasion. That's sham. That's a sham, man. Oh, my bad. False claim. You will retain complete control over your income and assets with the establishment of a trust. Truth. Under non-grantor trust arrangements, so they're being specific, under non-grantor trust arrangements, you must give up significant control over income and assets. That is true. Under grantor control, you still have, under grantor trust arrangements, you have control. Under non-grantor trust arrangements, you must give up significant control over income and assets. A trustee is designated to hold legal title to trust assets, to exercise independent control over the trust, and to manage the trust. So the trustee controls it. False claim. The taxpayers may deduct personal expenses paid by the trust on their tax return. Trust pays for, my toothbrush or whatever, and I deduct that on my individual 1040. What? That's abuse. What? That's tax evasion, y'all. Truth. Non-deductible personal living expenses cannot be transferred into deductible expenses by virtue of assigning assets and income to a trust. Once again, what if the trust generates the income? What if the trust generates the income? False claim. Taxpayers can depreciate the personal residence and furnishings and take them as deductions on their tax return. Truth. Depreciation of a taxpayer's personal residence, the taxpayer owns it, and furnishings is not deductible by virtue of assigning the residence to the trust. You can't assign it. It must be completely titled into the name of the trust, not by assigning it. Notice the words that they're being used. To stop abusive trust promoters, the IRS has recently undertaken a national coordinated strategy to address abusive trust schemes. Looks like they're talking to CPAs and tax preparers. So check this out. Woo, running out of time. Hopefully they let me stream on this episode. Question, what is a trust? A trust is an entity created and governed under state law in which it is formed. Okay? We're talking about that's public trust. A trust involves the creation of a fiduciary relationship between a grantor, a trustee, and a beneficiary for a stated purpose. A trust may be created by any of the following methods. A declaration by the owner of property that the owner holds the property as trustee. That's a grantor trust. A transfer of property by owner during the owner's lifetime to another person as trustee. A transfer of property by owner by will or other instrument taking effect upon death of the owner in trust to another person as trustee, or an exercise of power of appointment to another person as trustee, or enforceable promise to create trust. We got 90 seconds left. If you want to stay on the line, you got to call in 424-222-5250 or 563-999-3625. They're going to kick you off if you're not on your phone. Blah, 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 blah. Where was I at? An exercise of power of appointment to another person as trustee, or an enforceable promise to create a trust. I'm going to go back. A trust may be created by any of the following methods. So pay attention to that. Question: who is the grantor of a trust? The grantor, also known as a trustor, settlor, or creator, is the creator of a trust relationship and is generally the owner of the assets initially contributed to the trust. The grantor generally establishes in the trust instrument the terms and provisions of the trust relationship between the grantor, the trustee, and the beneficiary. These will usually include, now look, they included the grantor in there. These will usually include the following: the rights, duties, and powers of trustee. If the grantor has rights, duties, and powers of trustee, then it's grantor trust, and it falls under the Grantor Trust rules. That's a big no-no. Distribution provisions: ability of the grantor to amend, modify, revoke, or terminate trust agreement. It's a grantor trust. That's a revocable trust. Designation of selection of trustee or such trustees, and the designation of state under which the terms and provisions of the trust agreement are to be governed. Great. They didn't kick us off. We're still streaming, y'all. I was concerned. Question: what is a trustee fiduciary? The trustee obtains legal title to the trust assets and is required to administer the trust on behalf of the beneficiaries according to the express terms and provisions of the trust agreement. Or they're talking public, so they say agreement. I like to say contract. A fiduciary is an individual organization charged with the duty to act for the benefit of another. A trustee is a fiduciary. Here we go. What is a simple trust? A simple trust is a term used in the Internal Revenue Code to define a trust that is not a grantor trust or required to be treated as a grantor trust, is required to distribute all income annually, and does not distribute the corpus of the trust or make charitable contributions. Okay? So if you don't distribute the corpus of the trust, there's a taxable liability at the end of the year. And if it doesn't make charitable contributions, and it's not a grantor trust, it's a simple trust. Cool? Question: what is a complex trust? A complex trust is a trust that is not defined as a simple trust or a grantor trust. A complex trust is a trust that is not defined as a simple trust or a grantor trust under the Internal Revenue Code. That's all I have to say about a complex trust. That's why I definitely I will make an executive decision and state that every single trust that I administer is a complex trust. That's why they don't talk about it. I love how they answered that question. Next question: what is a grantor trust? A grantor trust is a term used in the Internal Revenue Code to describe any trust over which the grantor or other owner retains the power to control or direct the trust income or assets. If a grantor retains certain powers over or benefits in a trust, the income of the trust will be taxed to the grantor rather than the trust. Okay? So the IRS really wants to deal with simple and grantor trusts. Period. All revocable trusts are, by definition, grantor trusts. An irrevocable trust can be treated as a grantor trust if any of the grantor trust definition contained in Internal Revenue Code, subsection 671, 673, 674, 675, 676, or 677 are met. If a trust is a grantor trust, then the grantor is treated as the owner of the assets. The trust is disregarded as a separate tax entity, and all income is taxed to the grantor. Sounds like a sole proprietorship to me. Or an improperly organized and classified LLC at the state level. So if the grantor retains power in the irrevocable trust, it's a grantor trust. I don't care if it's irrevocable. There are certain rules. Check out those codes, 671 and 673 through 677. What is an irrevocable trust? An irrevocable trust is a trust which, by its terms, cannot be modified, amended, or revoked. You cannot break the trust. The trust is there as long as the trust contract or agreement says it is. For tax purposes, an irrevocable trust can be treated as a simple, complex, or grantor trust, depending on the powers listed in the trust instrument. Okay? First time they called it a trust instrument. I love it. I love it that they said trust instrument, because that's what contract is referred to when you're dealing with an irrevocable contract trust. They call it the trust instrument, or they call it the governing instrument. A revocable trust may be revoked and is considered a grantor trust. State law and the trust instrument establish whether a trust is revocable or irrevocable. If the instrument is silent on revocability, then most states consider the trust revocable. What is a testamentary trust or inter viva trust? A testamentary trust is created by will, which begins its existence upon the death. And it proceeds to go through. Do trusts have a requirement to file federal income tax returns? Trust must file a Form 1041 U.S. income tax return for states and trusts for each taxable year where the trust has $600 in income or the trust has non-resident alien as a beneficiary. However, if it's classified as a grantor trust, it is not required to file a Form 1041, provided that the individual grantor reports all items of income and allowable expenses on his own Form 1040. How does the trust compute the income tax liability? I've been told that I can. Question. I've been told that I can assign income to a trust, and I will not be taxed on the income. Is this true? No, it is not true. It is not absolutely. It's absolutely not true. I'm telling the truth. They say income that is earned by one person cannot be assigned to another for federal income tax purposes. You would still be liable for income taxes due on income earned, even though it was directly paid to the trust. May a trust deduct contributions to charity? A simple trust cannot. A complex trust may, but the deduction must meet rules similar to those deductions by individuals. So it's telling you the distinction. A complex trust can contribute to a charity, because they said a simple trust cannot contribute to a charity. And they said what a simple trust was, and they said as a grantor trust, they said what that is, and they said a simple trust cannot deduct contributions, but they're saying a complex trust may. And they said, let me go back to the page. They said that a simple trust cannot or does not disperse its corpus and does not give to charities. So they, right there, if y'all read through this, the IRS puts you on the game. If you're studying trust, private trust, contract trust, they're putting you on the game. If a grantor trust, the deduction will be attributed to the grantor and be governed by Internal Revenue Code, Section 170, blah, blah, blah. Will I owe federal gift taxes on property contributed to the trust? The creation of a trust, the contributing of property to a trust may or may not have a gift tax implications, which will require the filing of Form 709. For gift tax purposes, a gift is complete to the extent the donor, the person making the gift, has irrevocably parted with dominion and control over all or part of the transferred property. Title, it's important. Title is important. Can't say that's a trust cell phone bill because the phone bill is not coming in the trust name. Can't say that's trust property because the property is not titled in the name of the trust. Where a grantor trust has been established, generally, no gift tax would be due on property contributed from a grantor trust. I'm moving quick, y'all, because I'm about out of time. I'm actually going over time as we speak. Excuse me. But there's two more things I want to talk about real quick. Well, three more. I'm going to go quick, though. Common law trust, special types of trust, common law trust. I didn't tell you this. That a common law trust exists. I was sitting here to tell you that there's I don't know what a common law trust is, man. That confuses me. That terminology confuses me in the same way that sovereign citizen confuses me. Contrary to the claims of promoters, common law trusts no longer exist since all states now have statutes relating to the creation and operating a trust. Contract trusts exist under the common law right to contract. That's what people are getting confused. We have the common law right of contract. The people's right to contract is unlimited. Ain't no common law trust. Our right to contract is unlimited. And that's been upheld by the Supreme Court. And it's a common law right to it derives itself from the common law right to contract. Ain't no common law trust, man. I understand what you're saying because I understand what you're saying. But if you want to get specific, ain't no such thing as a common law trust. Contract trust exists under the common law right to contract. And they afford their protection under Article 1, Section 10 of the Constitution. Because no state, or which says in part, no state shall pass any law impairing the obligation of contract. Hopefully y'all made that specifically and unequivocally clear. Complex contract trusts are private. They're not state or domestic entities. They owe their existence to the common law right to contract because they're contracts. And they find their protections under Article 1, Section 10 of the Constitution. No state can pass any law impairing the obligation of a contract. So a state may have statutes relating to the creation and operation of a trust, but a state cannot impair the obligation of a contract. Pancake and toast. Personal residence trust, qualified personal residence trust, grantor retained income trust, grantor retained annuity trust, grantor retained unit trust. I've never heard of that. Foreign trust, charitable trust, charitable lead annuity trust, charitable lead unit trust, charitable remainder trust, pooled income trust, life insurance trust, qualified subchapter S trust, electing small business trust, funeral trust, rabbi trust, business trust. The term business trust is not used in the Internal Revenue Code. It is not. The regulations require that trust operating a trade or business be treated as a corporation, partnership, or sole proprietorship if the grantor, beneficiary, or fiduciary materially participates in the operations or daily management of the business. What if you're operating through trust? And the trust is not operating a trade or business. What if I'm executing a contract? And that contract entity is not operating a trade or business. And that contract just so happens to be private. If the grantor maintains control, then the grantor trust rules apply. Otherwise, the trust would be treated as simple, complex, as simple or complex, depending on the trust instrument. I ain't say it, the IRS said it. Governing instrument, contract. Y'all can deal with those trust agreements. I'm over here with these trust contracts. I'm over here with this governing instrument. Yes, a trust contract is an instrument. The term pure trust is not used in the Internal Revenue Code. True. Whatever the name of an arrangement, however, the taxation of an entity must comply with the requirements of the Internal Revenue Code. The requirements are based on the economic reality of the arrangement, not its nomenclature. Who is getting paid? The economic reality, obviously, what they're talking about, who's getting paid? The trust or the individual in question, so they can associate it as a grantor trust. They talk about Illinois Land Trust, Delaware Business Trust, or Alaska Business Trust, trust established to hold and invest assets with greater flexibility than allowed by most trusts. Permits liability, limited liability, creditor protection, and valuation discounts. These trusts are a creation of the Delaware and Alaska legislatures. Lost me. The legislative trust is the public trust. Unincorporated business organization, a term used by trust promoters to identify trusts they sell to disguise the fact that it is a trust. This term and the term Massachusetts Business Trust are often used interchangeably. These are not terms used by the Internal Revenue Code, right? Because when you do the 1041, it says check this box that applies, or check all that applies. Simple, grantor, complex. All right? Hopefully, you have learned an insurmountable amount of information. Hopefully, I've raised your awareness here with this episode of The Foundation. And trustfully, you understand what an abusive trust is and to stay away from it. But most importantly, they're looking to evade taxes, to hide the true ownership of assets and income, and to hide the true economic substance of specific transactions. I suggest you stay away from those as well. So be on the lookout. I told a few people I was going to do abusive trust for this episode. People say, hey, man, don't you do trustee training? Isn't that, one of the ways that you generate income as a trustee? Yeah, it is. It is. I might be stepping on my own toes. But I want to bring the information to y'all. And on top of that, I understand what trust I administer, and I understand the type of administration that I teach in the private. And it's not the administration of any entity that is created by any state legislation. At all. Specifically, it is a contract. It falls under trust law on how the income is dispersed and how the income is taxed. I know that specifically because I'm an executive trustee. Otherwise, it is a contract. It is not a legislative state agreement. It is a private contract. It is recognized to do business in over 120 countries. It is a trust contract. The world is ruled through contracts. States are run through contracts. Everything operates through contracts. And I own nothing, and I control everything. And I do not evade or hide ownership, true economic substance of transactions, or attempt to claim deductions on personal taxes for personal expenses that were made on behalf of the trust. I stay away from that. I want y'all to stay away from that. Y'all want to get at me, hit me up. admin@welcometothefoundation.com. Get with me in the problem if you like. But, I trust that this episode really, hit home. That there is a specific, significant, distinctive distinction between public and private. There's a distinction between tax avoidance and tax evasion, and there's a distinction between simple, complex, and grantor, and a trust contract versus a trust agreement. So I'm going to hit the phone lines real quick. Got a couple callers. Go through a couple callers real quick. Might not be able to get to all y'all because I'm way over. And I'm ready to get up out of here. First caller, 347-2088. 347-2088. Peace, what's your name? Where you calling from?
Hey, Peace, what's the deal? It's Dal from Brownsville. I'm with my sister tonight. We doing a little, painting and whatnot. How you doing, Sir L?
I'm doing well, brother. How you doing?
I'm all right. Getting back in the groove, Yeah, getting back in. You see a lot of encouraging words over the week like that, Go out there and make that bread, Yeah.
Yep.
But elsewhere everything's all right. Your family's all right?
Yeah.
You guys all right?
Yeah, I have to say so, absolutely. How about your family?
My sister, my family's all right.
Easy, man. How you doing?
God bless, Saltel. How's the family?
Family's well. How are you? How is your family?
Blessed. Peace to the community. Forgive me to the kings and queens. We going to be catching up to you just now. We on the grind. We trying to get our buckets together so we can get the precious metals going. So we on the grind. We getting our fees together. So we be contacting you very shortly.
Okay, sounds good, sister. Looking forward to it.
Okay, so be blessed. All right, then. Hold on.
All right, peace and love to everybody out there. So, El, I'm going to let you take the next call. I know you ain't got that much time, all right?
I appreciate you, brother, man. Love you, man. Have a great week, man.
Love you, too. All right, you too.
All right, peace.
Happy.
Next caller, 925-318. 925-318. Peace. What's your name? Where you calling from?
Brother Soel, how you doing, man? This is Brian.
Peace, Brian. How you doing, man?
Hello?
Good.
Oh, yeah. How you doing, man? Hey, man. First of all, I just want to say thank you for doing all what you're doing, man. Because I'm sitting here with my mother and we're listening to this. So we were, trying to soak up all the information that you was presenting to us. And I just wanted to say, I appreciate you working with me and hooking me up with Brother Teron and y'all, helping me out. I really appreciate that, man. Blessed to be around people that's trying to help people get in a better situation. So, that's all I was trying to say, man. And I'll talk to you, on the private side. But I just want to say out in the public, thank you and, Brother Yusef. And I'm learning about, I'm listening to your boy, Brother, Brother Sherrod or I think I said his name wrong. The brother you had on previously, he was talking.
Oh, Brother Sharif. Yeah, Brother Sharif.
Brother Sharif. There's that Sharif. I'm listening to his stuff and it's starting to click to me about the whole credit thing and stuff. I'm still, trying to learn it. But I said between you and Brother Teron, I hope that you listen to it. Listen right now. I appreciate you guys doing what y'all doing. I'm just hanging here and just get what I get.
All right, fam. We appreciate you, man. Thanks for calling in.
All right.
And, have a great night, man. I'll talk to you soon.
All right, man. You too. Peace.
And, my bad. Peace to the mother. You know what I'm saying? Your mother's listening. And peace to the mother. Brian's mother. I don't know your name. I apologize. Peace to you. Hope all is well. So, yeah, man, I appreciate you calling in, family. Peace to the gods. Man, is it getting weird? Hopefully it's not getting weird. Okay. Next caller. Where we at? 205. Hold on, I think I know. Nah. Yeah, maybe 205 0377. Peace, what's your name? Where you calling from?
Yes, sir. You already know. Your brother down south, Mellow Bay. With the peace to the gods, man. Peace to the Elohim. What it like on your side, so? What's the energy like?
Yeah, it's all love, man. How you doing, man? Everything good?
Man, hey, brother, like you said, man, I'm doing well. I'm talking to you. You feel me?
Yeah, that's what's up, man.
No doubt. You know, I got my back a bit against the wall, as we say. You know what I'm saying? Trying to gain more stability, but at the same time, you know, I've been implementing, playing, plotting, strategize. I'm about ready to bomb, so you know, I'm ready. The thing is now I'm just, you know, implement some other strategies as well, man. I'm looking into trying to get me some new wheels so I can maneuver and get back and forth and things. But at the same time, I'm about ready to go and place that order, man. I'm just right now, man. Just had to create some more ways, like I said, to be a little bit more stable out here. You feel me? So it is what it is, man. I was on the Max Trance and I came in probably like in the early show when you got through the events, you know what I'm saying, the topic, the update events or whatnot. Yeah, man, different trusts, man. I just want to tell the family, you know what I'm saying, man, you really want to check into trust law. You really want to get off into different trusts and find out what's the difference between this and that, you know what I'm saying, personally and all that, man, because you can really get yourself into something, you know what I'm saying, that you may not be want to get into, you know what I'm saying, you may not want to be held liable for. So I just put it like that, you know what I'm saying. But at the same time, though, man, yeah, you know, protect it, put it in the trust, you know what I'm saying. You know what I'm saying? That's the only way you're going to give us that control and that protection that we need, you feel me? Because other than that, you're going to be caught naked with your pants down, and you don't want to be out here trying to own things and trying to acquire things, and then before you know it, it's not protected. You can't protect it, pass it on, or produce more of it. So protect, pass, and produce, man. You know what I'm saying? You know what I'm saying? So that's definitely what it is, man. I give thanks to the ancestors, give thanks to the Creator, man, for you, bro, for still being on your square. You know what I'm saying? Doing what you're doing on this planet. You know what I'm saying? So, you know, you're always in my power of thought, bro. You know what I'm saying? I'm always thinking about you. Even when I'm on the bus line just dropping little jewels for brothers to get into. And, you know, it's like, man, appreciate that. And also, I pass them on the number and different things, too, off top, you know what I'm saying, and the website. So, you know what I'm saying? You know, each one teach one, man, pass it on, you know what I'm saying? It is what it is. But, yeah, definitely, though. So, you know what I'm saying? All is well, so to speak, here. You know what I'm saying? My feet planted within the soil. I'm on the ground. You know what I mean? So it is what it is, man. It definitely is what it is.
Man, I appreciate you checking in, man. Sounds good, man. Thanks for all the love, man. You know, and thank you. You know, all praises due to the Creator and ancestors, man. I'm just, you know, playing my part, man. But I appreciate the recognition, man. So thank you very much. And
definitely.
You know, have a great week. And I appreciate you checking out the shows, man. You know, you're one of the regulars, you know, and you know, it doesn't go unnoticed. So thank you very much.
True.
Honor.
Okay. Indeed, bro. Give you know what I'm saying, give my regards, you know what I'm saying, to the family and the rest of everybody, man. You know what I'm saying? Let them know the brother Mellow Bay from down south, you know what I'm saying? You know what I'm saying? Sending out, you know what I'm saying, shouts and energy, man, no doubt. You know what I'm saying? Definitely.
Most definitely.
Yeah, you will keep us sane, bro. You know what I'm saying? You and the brothers, you know what I'm saying, you will really keep us sane out here, you know what I'm saying, in this world of commerce, you know what I'm saying, doing business. So, you know, like you speak volume, bro, you know what I'm saying, every week and dropping jewels and it's heavy, you know what I'm saying, it's really heavy, you know what I'm saying, for a lot. So, you know, just let the people know, bro, you know what I'm saying, study, man, definitely study, you know what I'm saying, if you have no difference, if you have no, you know what I'm saying, clue on the private versus the public, you know what I'm saying, and the benefits of it and whatnot, you know what I'm saying. We need to definitely, I encourage them, man, definitely, you know what I'm saying, continue to pick up on your studies, man, so you'll know how to maneuver. It's a whole new way of consciousness, you know what I'm saying, changes your whole well-being, actually, how you speak, how you act, how you maneuver, how you eat, you know what I'm saying. This thing is a way of life. It's a way of consciousness, so there's no way we can really just, you know what I'm saying, play this thing like it's just all about business and it's all about, no, man, this is the way of life. This is the way you're supposed to be maneuvered, you know, either you're a debtor or you're a creditor, you know what I'm saying, either or, you know how it goes, from what I'm saying.
Absolutely.
No doubt. So that's what it is, bro. I'm here. I ain't gonna. Yeah. I'm like this everywhere in every conversation. If the conversation is potential of this type of, you know what I'm saying, you know, dialoguing, you know what I'm saying, then I'm with it, bro. No matter where I'm at on the planet, I'm with it. Like, this is what we doing it. I mean, I always get ones who are knowledgeable and aware, and they're like, thank you, man. Like, they always say thank you when they're done. Like, they really give thanks, you know what I'm saying? Like, these brothers and sisters, they know the importance of this, you see what I'm saying? And I just encourage them to keep studying, you know. I let them know, I say, it's a great deal for me to drop this with you and share this with you, but it's even more powerful and a great deal for you to apply yourself. Do that, family. And you do that, get back with me, and we can build. So, you know.
Right.
Yeah, no doubt. Jot your ideas down, man. You got ideas, jot them down, no doubt.
Write them down and execute them.
No doubt.
What is it? Believe, begin, become.
And become.
Very
exactly.
important. Very, very important.
Exactly.
Number one is believe. And that's, you know, that beliefs are thoughts. You gotta believe in your thoughts and believe in the things that you see in your mind. And that's mentalism. So
true.
Absolutely, man. Appreciate you, man. And keep paying
Indeed,
your forward,
all the time. Yes, sir. Indeed, all the time. Thank you, brother.
What you do. Have a blessed week, man. Peace to the God.
Indeed. Peace to the God, man.
All right, love. 111. Peace. What's your name? Where you calling from?
Peace to the God. Peace to the God. Shut them down. Shut them down. I see you doing your thing.
What's up, family? How you doing?
Hey, what?
How's it going, man?
You know what time it is. Man. Just peeping in finally for the first time, man. Always listening to days when you be on live and direct, man. Just wanted to do a shout out to
man.
You know, yo, you doing it, man. You doing it. You setting the tone. You letting everybody know what's going on. Keeping everybody on track. You know what I'm saying?
Gotcha. Appreciate you, man. Yeah, absolutely. Thank you very much. Thank you.
Likewise.
It's all for y'all, man. It's all for the family.
You already know. Everybody better recognize. Brother ain't no joke, man. He giving you jewels, man. For real in the field, holy field. You know what I'm saying? So, you know, I'm going to yield the floor. I just wanted to give a shout out. You know?
I appreciate you, man.
And definitely be checking
thanks for calling in, man.
Shortly. Oh, definitely.
Yeah,
you already know,
I'm going to holler at you. Yeah,
you already know, fam.
You know what it is.
It's a work in progress. You know what I'm saying?
Yeah, got you.
All right. I yield the floor.
Hit me up.
Peace.
I'll talk to you soon, man. Peace.
All right, peace.
Man, I guess this was a good show, huh? I can't take no more callers. I'm sorry. My concern is that the show is going to cut me off before I'm finished. So I just want to finish. I want to say thanks for checking out the show. I want to say thanks for everyone who called in. Thanks to everyone who, checked the show out live. And if you're listening to this in the archives, thank you as well. I do my best to bring actionable information to the foundation so that we can, take steps and, catapult ourselves on proper footing. And this is just another episode where I attempted to do that. If I didn't, I apologize. I will work on it and get better. But hopefully you did gain some and you gained some clarity. It's best to dispel the myths, and especially the things that we're fearful of. It's best to just face the fear head on, And if the Internal Revenue Service is talking about abusive trust, you got to trust. You might want to check this out and compare and contrast what you're doing with what they're saying, because it's very important. And ultimately, it boils down to your wealth and your happiness, your family estate, which is most important. There are abusive trusts. There's some things in here that I had never heard of before that the IRS put me on the game. And it's not surprising. But ultimately, don't let things that other people say, other institutions, other entities, so on and so forth, say, turn you off from a particular thing. Do your own research. And in me doing my own research, I saw a lot of flaws in the wording, terminology, and nomenclature of, this document that the IRS is pushing out. I also saw a lot of stuff that was absolutely true. And hands down, I agree with. But specifically, they're talking about domestic trust, and specifically, they like to deal with grantor trust. And they're explaining a lot of these rules where it's actually a grantor trust situation. And that grantor trust situation, a grantor trust is a disregarded entity when it comes to tax purposes, just like a sole proprietorship. So it just reinforces what I do, as far as I'm concerned, and reinforces the trust administration that I teach by going through this. And hopefully it can steer people away from fraudulent cats, pushing fraudulent stuff, and promising fraudulent things with regards to trust, because it's a hot topic. Most people are waking up to the fact that there's some sort of economic slave, and everyone's looking to free themselves. It's not reduced to nationality or color of skin or, religions or whatever these days. So there's people out here trying to take advantage of people. They're charging all types of money and giving you crap. And when you go actually into court or you get litigation or you're audited by the IRS, you get whooped up, and they associate it as a grantor trust. And I know I don't do that. And hit me up, admin at welcometothefoundation.com if you want to get into trustee training for real. I'm not on some abusive trust arrangement type stuff. Understand, a contract trust indenture versus a trust agreement, which falls under legislation, and get some real information. Get the real knowledge with regards to trust and estates. I focus on the income entities here on the foundation because we're all generating income, whether it's an LLC, whether it's a C Corp, S Corp, nonprofit, trust, state, it doesn't matter. If it's generating income, holler at me about it. In the meantime, I want to say thank you very much for checking out the show. I want to say appreciate to all the family, all my regulars. Appreciate to, everyone who called in and added to the platform. HighFrequencyRadioNetwork.com is the website. WelcomeToTheFoundation.com is also the website. It is up, it is running, it is finished, and I'm appreciative. Sign up for the email list. Admin at WelcomeToTheFoundation.com if you want to holler at me. Thank you very much for tuning in to this episode of The Foundation. And tune in, next week for the next one. I appreciate you. I love you. Please appreciate yourself. Appreciate the ones around you. Love yourself. And enjoy yourself. Be good to yourself. And until next time, I leave you in peace, truth, freedom, justice, equality. Peace to the God.
We're gonna sing all the way live. High Frequency Radio.